Good day traders, this is Mdlalose. On today's video, we are going to be learning how to identify high probability trades. Yes, watch the video until the end so that you can become better at picking high probability trades using the strength meter. Before wasting so much time, let's get right into it. But yes, kindly make sure you subscribe and make sure you hit that bell notification button so that you can help the algorithm pick my videos to be one of the top forex videos. Okay, good. Yeah, so how do you pick high probability trades using the currency strength meter? This is one of the best techniques. I mean, guys, I'm giving you all my trading secrets. Yes, some of these things are hardly share, but to you, my friends that follow me, that are loyal to my YouTube channel, here's the free information that you can use to make sure that you become a better trader. So when you load your currency strength meter, it's very, very important to understand the high probability trades for the particular day. So for example, today we only had one high probability trade, which was the dollar and the New Zealand NZD USD. Okay, let's actually look at the trade and then let me explain why. If we go and put a vertical line right here, you'll understand that, okay, you will see that this is the dollar, the white line. It crossed above number one NZD. Number two, it crossed above the zero line. And then again, you had the New Zealand crossing below the dollar and crossed below the zero line. That on its own is telling you with high probability this is going to be a sell-off. Yes, with high probability. Nothing is 100%, but yes, this gives you that high probability trade. You can clearly see after the cross, the market moved sideways a little bit, and then they tanked, and technically we are still in a downtrend. Yes, we are still in a downtrend. This mustn't scare you because we still have the dollar being the king, and then the New Zealand being the weakest for the day. So it's a very simple technique, but if used effectively, or if you manage to identify these high probability trades, you'll be making pips day in, day out. Let's look at yesterday. Yesterday's trade was pretty much simple as well. Okay, in fact, you could have taken two trades. Oh, okay, yeah, two trades. I can see two trades here. Okay, number one, let's look at the yellow line. The yellow line is the CHF, right? So the CHF at this particular time, it had crossed below the zero line and it was trading below the zero line. And at the very same time, we had the Japanese yen trading above the zero line, also trading above the CHF. So if you go to CHF JPY, bam, here's your entry. That's your profit right there. Okay, because you identified the one that was strongest versus the one that is weakest. So instead of going in between here and trying to pick things that are actually close to the zero line, look at the ones that are trading above the zero line and the one that are trading below the zero line and simple match the two, because this represent a currency that is outsmarting or outclassing everything, or the currency that is stronger than anything versus a currency that is weaker than everything that particular day. When you identify those two, you marry them together, you get a nice beautiful trade. So another trade that you could have taken seriously, yes, this you could have taken mainly because if you focus on the CHF GBP CHF, yes, this is another trade that you could have picked. GBP trading above the zero line, CHF trading below the zero line, and then you go and look GBP CHF, bam, supposed to buy GBP against CHF there, and the market continued to go up and you made some good pips right there. So I can go back and show you as many examples as I can. In fact, let me actually increase this and put it to 500 so that we can see more bars. Yes, more bars. Right, here's another beautiful trade. I'm sure you're starting to understand this with ease. Okay, Japanese yen, right? It happens, right? This is a perfect example where what I'm talking about, sometimes it can reverse against you. Right, let's look at the Japanese yen. In fact, let me go back right there. USD JPY. Personally, I don't like to trade these twos. I don't even remember when last I took it a USD JPY trade, mainly because these ones, they are slightly correlated, so I don't like to trade things that are correlated, to be quite honest. Right, JPY trading above the zero line, dollar trading below the zero line, so we go USD JPY. Yes, we know for a fact that USD JPY went down, right? We know for a fact that it went down because we can clearly see JPY stronger, dollar weaker, and then could have taken the trade here, and then it continued to go down. Let's see how many pips from that zone. Yeah, it went down 34 pips something, even though it wasn't really the best trade because the dollar started going back up from this moment right here. For me personally, when dollar starts to do this, that's when I kill the trade. Even if it's on a small loss, I kill the trade because it's telling me that I'm not trading the weak against the strong at that particular time, because I only focus on the weak versus the strong. So the moment the weak start becoming stronger or the stronger start becoming weaker and I'm in that particular trade, that's my signals to start looking for the exit. Yes, that's my signals to start looking for the door. So there's plenty examples that you can actually focus on. Maybe let's look at the last example. Okay, perfect. GBP. This one I can see was a very nice one. Very nice one. We can already see GBP against the Aussie. Yep, GBP Aussie. We can see GBP is the weakest. Aussie is the strongest at the stage. So we go GBP, right? AUD. And when you see this happening in front of your eyes, do not hesitate to take a trade. Right? Do not hesitate to take a trade. So it went up 92 pips down, and then there was that pullback, and then continued to go back down. You can clearly see, right, GBP continued to go down, But as I said, that for me, the moment we start seeing the weak the stronger starting to become weak, and the weak starting to become stronger, especially this case also started falling, I would have killed my trade there, because I don't like to see this doing this. I want to see the weak continuing to weaken and the stronger continuing to strengthen. That's how I look at the markets. But it's a very pretty simple concept. Focus on the zero line. Look at the one that is weakest amongst all the currencies, and then you compare it to the one that is strongest amongst all currencies, and then you simply take a trade. Yes, like for example, today you don't have any business in trading anything else except NZD USD for now. Yeah, maybe NZD CHF, I don't know, but the trade that you could have taken today is NZD USD, nothing else. So if you're in other trades, you're completely doing it the wrong way. This is Mdlalose. Kindly share this video with your friends and family, and make sure you subscribe. Watch out for my next video. Goodbye.